Hi to IPO subscribers. Welcome to EG Live View. Today, let us review IPO from Lalithaa Jewellery Limited, a main board IPO. Here we go on. This is the financial analysis report generated by AI-powered software. Based on the metrics inputs given to the software, this company has been categorized as an unhealthy company. Let us see what are the financial weaknesses that made the company unhealthy company. Number one, first health analysis. Health analysis solvency. Solvency ensures the sustainability of the company. So here debt to assets ratio is 0.73. It should be less than 0.66. And net worth to assets ratio is should be more than 0.34. It is 0.26. That is the reason this solvency is as a negative. And next, coming to liquidity. Liquidity ensures the survival of the company. Here, current ratio is exactly 1.33. This is enough. But because of this AI-powered software, it should be in general benchmark is more than 1.33, but it is 1.33. Otherwise, liquidity position is very good. And only thing is quick ratio is 0.04. So 0.04 indicates that inventory levels with the company is very high. Out of the total current assets, inventory levels are very high. That is the reason why quick ratio is 0.04. And coming to operational efficiency, inventory turnover is 2.55 in moderate, gross margin 22.27. So you cannot expect more than 50% in the jewelry business. And that is the reason why this company has been categorized as a unhealthy company. EBITDA margin 7.19. So almost I should say very low at a very lower level. And net profit margin 4.04 and ROC is 42.6 and ROE is 41.6. Is okay. Coming to cash flows from operating activity, it is a minus 397.76 crores. That is the main problem. And coming to net cash flow for the year is also minus 36.21. So market value, so market price is 201 rupees. That is the cap price. And based on that market price, we are getting price earning ratio of 9.95. It's okay within the range. And coming to book value 3.43. It should be less than 3. It is more than 3. So let us see the projected PB also. Then we can have a decision on the valuation. So coming to growth indicators, all are positive. Sales growth is good, PBT is good, PAT is good. So, Lalithaa Jewelers Mart IPO, attractive valuation or a potential value trap. Lalithaa Jewelers Mart is coming up with 1,700 crore IPO at a price band of 190 to 201 rupees per share. The issue is scheduled to open on 17th August 2026. The company has a strong South Indian presence, attractive earnings valuation, and an ambitious store expansion plan. But there are also concerns around cash flows, competition, and governance. Let us analyze whether this IPO deserves investor attention. First, business overview. Lalithaa Jewelers Mart key highlights. Established in 1985 with more than 4 decades of operating history, strong presence across South India, operates 61 showrooms across 51 cities, focus primarily on mass market and value-conscious customers, strong presence in Tier 2 and Tier 3 cities. Product portfolio includes gold jewelry, silver jewelry, diamond jewelry, precious and semi-precious jewelry, strong focus on everyday and wedding jewelry, uses customer jewelry schemes, advanced payment schemes to build customer relationship. Plans to add 10 new stores using IPO proceeds. Okay, good. The company's regional positioning is key strength, particularly because a large portion of its stores are located in Tier 2 and Tier 3 market. Industry data also highlights the strong revenue growth and high revenue EBITDA per store compared with several organized peers. Good. Growth story. Why can Lalithaa grow? Organized jewelry opportunity, Tier 2 and Tier 3 expansion, new store expansion, strong regional brand, jewelry demands, and ICRA has also highlighted the company's established brand, experienced promoters, and a planned showroom expansion as a factor supporting expected medium-term growth. IPO and use of friends. So, 1,700 crore is the IPO. Fresh issue 1,200. Offer for sale is 500 crores. And price band is 190 to 201. The biggest component of the fresh issue is approximately 998.68 crores for inventory required for the 10 new stores. What? Inventory takeaway. Investor takeaway. The IPO is primarily supporting expansion and inventory requirements. That is positive for growth, but investors should also remember that jewelry retail is working capital intensive. Valuation. The big attraction, valuation looks attractive. At the upper price, it is 201. EPS 2020, good. PE is 9.95, is good within the benchmark level of 25. This is the biggest attraction of the a sub-10 PE valuation looks reasonable to attractive for an established organized jewelry retailer with a strong growth potential. Other valuation indicators, PE 9.95, attractive, PB 3.43, moderate, projected PE is 5.95, very attractive, projected PBB 2.5, reasonable, very good. Valuation is point of view is very good. So, subject to achieving the projected growth, key message on valuation, Lalithaa Jewellery IPO looks attractive, but valuation alone does not make a good investment. The big concern, cash flows. This is where investors need to be careful. The company reported negative operating cash flow of approximately 397.76 crores in financial year 2026. So, why is this important? A jewelry company can report accounting profits but still face cash flow pressure because of high inventory requirements, supplier payments, customer scheme settlement, working capital requirement. Therefore, investors should ask, are the company's attractive PE compensating investors for its cash flow risk? This is the biggest reason why I would not give the IPO a straightforward, strong subscribe rating. Competition and market share. The jewelry industry is highly competitive. Lalithaa competes with the established organized jewelry brands as well as numerous regional and local jewelers. Market share trend. In financial 2024, it was 6.46 and financial year 2025, it was 5.13. And in financial year 2026, it is 4.97%. So, investor alerted. Despite growth, the company's market share has declined. This means future growth will depend heavily on new stores plus customer acquisition plus competitive pricing plus brand strength. Promoters and governance, positive. Promoter holding remains high at approximately 82.85%. Post IPO, very good. Experienced promoters, long operating history, good. Concerns. Related party business operates in the same jewelry sector. Common vendor relationship exists with a promoter group entity. Certain disclosure limitations have been highlighted around a promoter group entity under liquidation. Investor view. Promoter commitment. Good. Governance comfort is a concern. Market sentiment. Current market sentiment appears mixed to positive. The IPO has attracted attention because of its reasonable valuation and strong regional jewelry franchise, of course. Recent unofficial GMP discussions have also indicated positive expectations. Although GMP is unofficial, can change rapidly and should not be treated as a fundamental valuation measure. Yes. At the same time, earlier reporting highlighted when investor scrutiny around governance and promoter-related concerns, which remains an important counterweight to the valuation story. Now, Overall market sentiment. Cautiously positive. Positive factors: valuation, jewelry sector, brand expansion. Negative factors: cash flow, competition, market share decline, and governance concerns. So, Eagle Eye View investors scorecard. Business good, industry positive, brand regional presence strong, growth potential good, valuation attractive, PE key positive, cash flow major concern, market share declining, governance watch, competition high, market sentiment cautiously positive, overall risk high. Final investor view. The good. Strong South Indian jewelry franchise, established since 1985, attractive PE of around 9.95, good, strong growth opportunity, 10-store expansion plan, high promoter holding. The bad, negative operating cash flows, high inventory requirements, declining market share, intense competition, related party governance concerns. Final verdict. Here I should tell you. See, the company has been depending on the funding from the institutions where they have to pay the interest. Now the company is going for IPO, so where they don't have to pay any cost for the funds. So that's what they can do now. They can save good amount of interest because of this IPO. In that case, the profitability of the company also will be increasing from year to year. So you can expect a good improve in company's business, good returns also you can expect. That's what I want to tell you. So that is the most and important thing what we have to keep is this IPO process are going to be helpful to the company in a big way. So final verdict, valuation is attractive, but financial quality needs caution. At around 10 earnings, Lalithaa Jewellers Mart IPO looks reasonably priced and potentially attractive. However, the company carries meaningful risk, particularly its negative operating cash flows and competitive pressure. There will not be negative operating cash flows from next year onwards once the company starts using the IPO funds. So one side is the company is going for expansion, the other side the funding what they are getting it is free of interest. So you can expect a good growth of the company. Eagle Eye View, subscribe with caution. Aggressive investors may consider the IPO because of the attractive valuation and growth opportunity. Conservative investors should wait for improvement in operating cash flows and market share stability. Closing line for every video. Lalithaa Jewellery Mart IPO is not a case of an expensive IPO. In fact, the valuation looks attractive, but the real question is, can the company convert its strong growth into sustainable cash flows? Of course, then experience, there are experienced people, they can do it also. That will ultimately decide whether this attractive valuation becomes an opportunity or a value trap. Of course, you can expect. Eagle Eye View, financial analysis with an investor perspective. As always, investment decisions should be based on your own financial goals and risk tolerance. Thank you for watching. If you found this analysis useful, please like the video, subscribe to the channel, and stay connected for more detailed IPO and stock market research. Thank you very much for watching this video.